Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're analyzing an important development surrounding Iraq's ongoing discussions related to the World Trade Organization and what this could mean for the Iraqi Dinar and the broader Iraqi economy. The key point being discussed is whether Iraq's integration into the global financial system, particularly through WTO accession, would require a real effective exchange rate prior to joining, or whether that adjustment could happen simultaneously with accession. To understand the significance of this, we first need to clarify what WTO accession actually represents. The World Trade Organization, or WTO, is the global body that governs international trade rules between nations. Membership signals that a country agrees to operate under transparent trade policies, tariff structures, dispute resolution mechanisms, and market access commitments. Iraq has been working toward accession for years, and progress in this area is generally viewed as a structural economic milestone rather than a short-term currency event. Now let's focus on the real effective exchange rate, or RER. This is not simply a nominal change in the Iraqi dinar's official rate against the US dollar. The RER measures the value of a country's currency against a basket of currencies, adjusted for inflation differentials. In other words, it reflects the competitiveness of a nation's currency in real terms. A shift in RER does not automatically mean a dramatic appreciation or revaluation. It can result from inflation control, productivity changes, monetary tightening, or structural reforms that improve trade competitiveness. The statement that Iraq's integration into the global financial system will most likely have a real effective exchange rate prior to accession suggests that structural currency alignment could occur before formal WTO membership is completed. This is logical from a macroeconomic perspective. Countries entering the WTO are expected to demonstrate monetary stability, transparent trade practices, and credible financial governance. A stable and appropriately valued exchange rate is part of that broader framework. However, the statement also acknowledges that it could happen at the same time as accession. That flexibility is important. WTO accession is a negotiation-based process. It does not mandate a specific exchange rate regime. Some countries join with fixed exchange rates, others with managed floats, and others with free floating currencies. What matters most is transparency and consistency in policy, not a specific numerical exchange rate target. For Iraqi dinar followers, this distinction is critical. WTO accession should not be interpreted as a guaranteed trigger for an immediate or dramatic currency shift. Instead, it represents structural progress toward integration into the global economy. Integration can influence investor confidence, foreign direct investment inflows, and trade diversification. Over time, these factors can affect currency stability and valuation, but they do so gradually and through economic fundamentals. Let's examine the short-term implications first. In the near term, news of WTO progress may support sentiment around Iraq's reform trajectory. If investors perceive that Iraq is aligning with global trade standards, it may increase confidence in the country's institutional reforms. That confidence can stabilize currency expectations, reduce speculative volatility, and encourage gradual capital inflows. However, short-term currency movements are typically influenced more by monetary policy decisions from the Central Bank of Iraq, oil price fluctuations, fiscal spending levels, and regional geopolitical dynamics. Iraq's economy remains heavily dependent on oil exports. Oil revenues account for the majority of government income and foreign currency reserves. Therefore, any discussion about exchange rate adjustments must also consider oil market conditions. If oil prices remain stable and Iraq maintains disciplined fiscal management, the environment becomes more supportive of currency stability. But WTO accession alone does not override these macroeconomic realities. In the medium term, WTO membership could enhance trade diversification. Iraq has long expressed a desire to expand non-oil sectors such as agriculture, manufacturing, and services. WTO frameworks can provide greater access to foreign markets and encourage domestic reforms that reduce trade barriers. Over time, this diversification reduces reliance on oil revenue and strengthens the structural foundation of the economy. A stronger, more diversified economy typically supports a more resilient currency. Another important factor is financial transparency. Integration into the global financial system often requires compliance with international banking standards, anti-money laundering frameworks, and cross-border payment systems. Strengthening these systems enhances trust between Iraqi financial institutions and global banks. This is particularly relevant for correspondent banking relationships and foreign investment flows. When financial institutions are seen as credible and compliant, capital flows become more stable and predictable. From a long-term perspective, the real effective exchange rate becomes increasingly influenced by productivity growth and inflation control. If Iraq manages to reduce inflation, strengthen domestic production, and improve governance, the RER may gradually adjust to reflect improved competitiveness. That process is structural and measured, not sudden or speculative. It reflects economic health rather than a one-time administrative decision. It is also important to understand that exchange rate policy is ultimately determined by the Central Bank of Iraq. The CBI's mandate includes maintaining price stability, managing foreign reserves, and supporting sustainable economic growth. Any shift in exchange rate policy would be evaluated against inflation risks, fiscal sustainability, and external balance considerations. WTO negotiations may coincide with these reforms, but they do not replace central bank authority. For those following the Iraqi Dinar closely, the responsibility to interpretation is this: WTO progress is a positive structural indicator, but it is not a standalone catalyst for immediate currency revaluation. Integration into the global system is a multi-step process. It includes regulatory reform, institutional modernization, banking sector improvements, and fiscal discipline. The exchange rate evolves within that broader context. Let's also address the timeline question. WTO accession processes can take years. They involve detailed negotiations, legal reforms, and policy adjustments. Even after accession, the benefits are realized gradually. Increased trade flows, improved investor confidence, and productivity gains do not materialize overnight. Therefore, linking WTO accession to a specific short-term currency expectation would not reflect how international economic integration typically works. A balanced approach requires watching multiple indicators simultaneously. These include Iraq's foreign reserve levels, inflation trends, budget deficits or surpluses, oil production capacity, non-oil revenue growth, and banking sector reform progress. When these indicators move in a coordinated and sustainable direction, they create conditions under which currency stability or gradual appreciation becomes more plausible. There is also the regional context to consider. Iraq operates within a complex geopolitical environment. Regional trade partnerships, cross-border energy agreements, and diplomatic relations all influence economic integration. WTO membership can strengthen Iraq's bargaining position in trade negotiations and improve its credibility with international partners. That credibility supports long-term economic normalization. From an investor psychology standpoint, news about WTO alignment often generates optimism. However, responsible analysis requires separating structural reform from speculative timelines. Financial markets reward consistency, transparency, and disciplined policy. They do not respond sustainably to isolated announcements without follow-through. If Iraq achieves a real effective exchange rate alignment prior to accession, it would likely be the result of careful policy coordination rather than a sudden decision. That alignment could reflect inflation adjustments, monetary tightening, improved foreign reserve buffers, or changes in trade competitiveness. Such adjustments are typically incremental and designed to preserve macroeconomic stability. If alignment occurs simultaneously with accession, it would likely signal that reforms have matured to a point where policymakers feel confident in both trade and currency positioning. Even in that scenario, the adjustment would be expected to align with economic fundamentals rather than speculative targets. The key takeaway is that WTO integration is part of a broader modernization strategy. It fits alongside digital banking reforms, anti-corruption initiatives, tax system improvements, and infrastructure investment. When viewed collectively, these reforms can enhance Iraq's long-term growth trajectory. A stronger growth trajectory supports stronger currency fundamentals over time. For short-term Iraqi Dinar followers, patience and realism remain essential. Currency markets reflect economic data, policy decisions, and global conditions. Sudden and dramatic shifts without underlying structural support are rare in modern managed exchange rate systems. Gradual normalization is far more common. For long-term observers, WTO accession represents a milestone in Iraq's reintegration into the global economy after decades of sanctions, conflict, and structural disruption. It symbolizes policy alignment with international standards. That alignment builds institutional credibility. Institutional credibility builds investor confidence. Investor confidence contributes to sustainable growth. As we continue monitoring developments, the responsible approach is to focus on verifiable economic indicators rather than speculative timelines. Watch inflation reports, reserve updates from the Central Bank of Iraq, fiscal policy announcements, and trade data releases. These metrics provide concrete signals about the direction of the economy. In summary, progress toward WTO accession is a constructive development for Iraq's economic reform narrative. A real effective exchange rate alignment prior to accession is plausible from a policy standpoint, but it is not a mandatory requirement nor an automatic trigger for dramatic currency change. Integration into the global financial system is a process, not a single event. It strengthens structural foundations, enhances credibility, and improves long-term economic resilience. For Iraqi Dinar followers, this means focusing on fundamentals. Short-term volatility may occur based on policy signals or external factors, but sustainable currency strength depends on inflation control, fiscal discipline, trade diversification, and institutional reform. WTO integration contributes to those goals, but it does so gradually. We will continue to analyze each development with a balanced and fact-based approach, separating structural progress from speculation and providing context that helps you understand what each step truly means. If you found this analysis helpful, make sure to subscribe to the channel for responsible and factual Iraqi Dinar updates. As always, this content is for informational purposes only and should not be considered financial advice.